All right, so here we are talking about how breakouts happen and what we look for in breakouts. Okay, there's several things that we go over that are redundant. They continue to do the same thing. Always one over the over. Every single day there's a play in the market. Every fucking day there's a play for somebody. Okay, it's like everybody has to eat, so to speak. What are you hungry for that day? Are we long bias? Are we in a sell-off? In any of those ways, people make money. Now, what we're talking about is a long bias breakout. Okay, these are some of the reasons and catalysts that we have put together through value-added trading that have been the most substantial and percentile of looking back and going, okay, what was that breakout from? And analyzing each and individual breakout, okay? And these are for NASDAQ stocks only. These are not OTC breakouts. These are NASDAQ. I want to emphasize that, okay? So let's take a look. Breakout buying, what it takes. So when earnings come out, this year sucked. Earnings fucking sucked for everybody, most companies, not everybody, but most companies. And because of the virus. So furthermore, earnings. When a company comes out with earnings and they've got a product that's doing well and their earnings are well, we use Tesla for example. Fucking beautiful, beautiful company. I hate using this as an example, but it's a great example over the big picture of a company that continues to grow earnings, continue to grow, and everything. We don't trade Tesla. I just use it as a big picture analogy. Okay, earnings. Big news with the company. If something comes out with the company saying they've got a new product, they developed a new vaccine, they've got a new independent research firm that just came out with something new, someone just recreated fucking the wheel, that would really change it. But, you know, some of those ideas. A new deal or a co-deal with another big company. For instance, Apple says this China company or another company has taken the deal with them that they have come out with a solar panel charging through the integrated of the back of the phone. I remember that was a few weeks back, a month ago or so, and maybe a little more. But regardless, they got the deal with Apple, okay? With fucking Apple. It came out with a deal that they signed with Apple, a co-deal with a big company. This stock had like literally I think it was, I have to pull it up and you guys, I might even use this one as an example in the video vaults, but it's it was a penny stock play. It was a less than fucking $2, I think, and it ended up moving to like doubling its size that day, okay? Early in the morning, as a matter of fact. So a new deal with a big company. A new CEO or someone who has done something well for another company, who's moved companies and come over. That generally is a sign of bringing when someone leaves a tribe, and they usually have all their followers and whatever it may be, and they bring them with them. So something like that is a new CEO, a new officer. Maybe they brought in someone. Reverse mergers are huge. Whatever we talk about, reverse merges, splits, all that shit in detail in Stocks 101. But those are very, very, very like here and there. Reverse merges are like IPOs. You accept the difference between an IPO, you know it's coming out, and you know all the logistics of it, and its offerings and so on and so forth, whereas reverse merges, they just happen, baby. So again, we talk about how a reverse merge can take a stock and squeeze that fucker in our biased long direction for a breakout. And again, next one would be IPOs. We just looked at the recent one, Coinbase, COIN. Geez, that thing just smoked $100 in the first hour of trading. So we know that buying IPOs, I've had very successful. The problem is exiting in them, because most IPOs, you don't know when they're going to do it. They tell you a day, but they don't tell you the time. So you've got to. That's another thing. When we talk about IPOs in Stocks 101 in the raw, I detailedly tell you every fucking thing about how to. You can't leave the computer if you're ready for your IPO to launch. You just can't. Okay, it's all or nothing. You know where it's at. You know where your order's in. You know where it's supposed to be speculated at. You know where it's some at. And as soon as it opens, there's a lot of shit that goes on, and you got to be right on. It's very, very volatile and very, very, very fast. So IPOs are good. A lot of times they'll make it all day. Okay, a lot of times they get shot up and they have to find themselves. With IPOs, we talk real quick about it. it's funny, when the company comes out initially public, they could put it at whatever the fuck they want, essentially, but they put it at a low value and the thing goes up. The guys at low value going, damn, we could have made it more and said it issued at $50 a share instead of 25. But in hindsight of that, now we got all these buyers, and now we got people, now we have all this equity in the company being driven out. So beautifully, win, lose, draw, it's a balance, but needless to say, IPOs are fun and funny, and I've done well with them. Okay, this side. So on most of my breakout plays that we buy, and most of the stocks that we trade on the NASDAQ, I like to find low float. A lot of the times lately, a lot of the plays have been real high floats. It's been a weird thing. I've seen I'm adapting, and this is what I'm coming to you right now, telling you that there's adaptation. But low float, which means, again, I go over float 101, what a float is. So you got to know what the float is, but also what's important about the float that you have to take into consideration and know is what the fuck the short interest is, or what the most recent short interest is. What that tells you is that, okay, and then part of the short interest here, and back to what it tells you, is that, is it hard to borrow? If it's easy to borrow and it's got a high percent of short interest and it's easy to borrow, meaning if you go and you do a short locate and there's a lot of them, then you know that this thing's susceptible to being shorted at any moment. If you've got a low probability short interest and you've got a hard to borrow, for instance, which are minimum shares that are being reserved for shorting, then that would be a positive sign to go into a long bias breakout. Again, this is very important in the aspect of breakout buying, especially when you're on low floats and things are happening. A lot of times in some of the videos we'll show that in the video vaults we do when it's trading over itself. It's trading 5, 6, 7, 10 times itself to float. That's beautiful trading, okay? Volume, high volume, lots of volume. You read your volume. Just because the chart says you're high for the day, if you're not trading and there's no volume being traded, and you're trading what we know as sideways. That's not good. Usually you should have already been out. I try to teach you guys not to go sideways, okay? You get out before it goes sideways. Again, VWAP is so important. I can't emphasize it always enough. If you're above the VWAP, you are in a bullish move. And if you are below the VWAP, you are in a bearish move, okay? So, those two are very important. You always want to be above VWAP on a buying breakout at or above VWAP, okay? You have to be above VWAP for it to show strength of an upward trend. Making out new day highs, new day lows, okay? The next thing is your time in sales, okay? You've got them, you can see them out of your peripheral vision. You can see that there's a lot of prints going on that are in the green, okay? You've got the walls that come in that are equal at or red or sell off, greater or less than the bid. Level twos. If all of a sudden you see, and you're actively trading this stock, and your level twos have heavy walls of buyers or sellers, hello, this is exactly what we teach in level 2 raw. You cannot not know how to read level twos because it's your saving grace. The chart, you're too late. The chart prints the tape, okay, of the time and sale of the bid ask. So your chart is the last thing that's already happened. Okay, so the next thing that a lot of people fail to recognize, which I use a lot in futures, is the order books, your order flow. Order flow is more so on the future side of things, but order books are what they're being spot and sold. Where's the heavy load? Do we have heavy loads in this area or that area with heavy volumes? Do they all equal amount to themselves? And that's something a little more in depth, which we have in the video vaults as well. But again, this is the bottom line. If you're buying anything on the NASDAQ, it's got to have some type of a catalyst. These are catalysts, and the reasons why something may have a tendency to grow legs or stand tall or continue to break out and grow into a business. But again, don't ever